Hello and welcome to this Forex News Preview video here at xm.com. I'm Christina Barthelins, investment analyst, and today we're going to discuss about this week's FOMC policy meeting. So the two-day policy meeting concludes on Wednesday, and a statement on interest rates, including the famous dot plot that shows policymakers' rate projections for the coming years, is expected to come in public at 18 GMT. The FOMC members will be also updating their growth and inflation forecasts in the same statement, while 30 minutes later, the Fed chief Powell will be holding a press conference to explain everything that has been discussed during the meeting. According to forecast, the US Central Bank is highly expected to keep interest rates unchanged within its 2.25 and to 2.5 range target. But in the previous meeting in January, the Fed chief appeared surprisingly uncertain about the central bank future hiking plans, saying instead that the Fed will hold a patient stance because of a weak global outlook and muted inflation pressures. A few weeks ago, U.S. wages for the month of February reached the highest growth in almost a decade, and the unemployment rate dropped back below 4%, indicating a tight labor market and probably more inflation for this economy. But external risks such as the ongoing trade war between the US and China, Brexit, and a growth slowdown in China and the Eurozone is a source of uncertainty about how US economic conditions will develop in the future. For that reason, policymakers decided to lower their rate hike projections from 3 to only 2 in January, while for 2020 they estimated only one rate hike. So given the cloudy global outlook and also Powell's latest comments that interest rates can remain on hold as the US Central Bank waits to see how conditions abroad evolve, it will be interesting to see whether the Fed will downplay its rate projections once again, probably signaling one rate increase or none at all for 2019 compared to a 42% chance of a rate cut by January 2020 already priced in the markets. Comments on the balance sheet will be also closely watched, especially after the Fed said it would stop trimming asset holdings this year, indicating its willingness to keep supporting the economy at a time when risks abroad threaten US economic growth. In market reaction now, dollar yen could trade lower at 111 and 110.60 if the Fed appears more cautious than the markets are currently pricing. That is lower rate and economic projections, as well as more dovish press conference and no specific timetable for the end of the balance sheet reduction. On the flip side, if policymakers appear optimistic that the economy is still resilient enough to afford 2 rate increases this year and one in 2020, then dollar yen could rebound towards 111.60 and 112, while higher resistance could also appear around 112.75. So that's all from me. Thank you for watching and have a great day.